Hello guys, and today I just simply wanted to talk to you guys about what my day trading strategy is in the Forex market, because a lot of you guys I know for a fact are struggling, as I used to as well. So without the babbling, let's hop right into the charts and showing you guys what my strategy is. My strategy is based off of three currency pairs: GBP US dollar, Euro US dollar, and USD JPY. There's 28 currency pairs, and keeping it small at 3 or 2 is prime because you can just keep your attention focused to those three pairs. Although I do branch out and do a little bit of penny stocks and a little bit of options, these are what I mainly trade on a day-to-day basis. Sometimes I'll swing and sometimes I'll day trade. Mostly day trade, obviously, as you have to wait for your swings to hit zones. What I do is I look for zones like supply demand zones. Also take in support and resistance in consideration with my trades, but I also use volume to see how much is coming in and coming out. Also see RSI to see if it's overvalued, being overbought, being oversold, or just right in the middle. That is a big confluence as well, and it helps me make my trades a lot as well. And another thing I use is the moving average, just to make sure that when we want to go long or short, we're in this right range for our moving average. And that's really about it. It's just that simple. Supply, demand, support, resistance, indicators, volume, RSI, and moving average. That is literally it. That's all you need to be a profitable trader. Stop trying to overcomplicate things. But first and foremost, let's just show you guys an example of a trade I actually lost, right? I lost a trade today. It is what it is. And honestly, I learned a lot from it, and I'm very proud of myself for actually losing this trade. So what I saw on Euro US dollar was this demand zone that I have highlighted, and you can tell right here we closed, then moved back up to the upside. I ended up taking that trade in hopes that it would at least come back up, make that double top back up that high. And obviously my stop loss is focused over here, so we're focused on what that low was. So it was around 3.9 pips, a good old 3.88 risk to reward, pretty solid. As you can tell, we broke out, then had that little spike almost halfway up to our take profit point and reversed and went back down and stopped me out. Why am I proud about this? Because a lot of the times I've been stopping out extremely early for my stop loss, and today I just let it ride out and didn't really care about the results. Other than the fact that I lost the trade, I learned a lot, and that I should continue to let my trades ride out because my wins are going to be a lot bigger than my losses. The losses don't really matter. Okay, so that was my loss today, but I also do want to show you guys another example. Euro US dollar right here. You have a strong demand zone, and you can tell we have this big resistance line, and we keep battling. Usually what you want to do is you want to close above that resistance line, but we never really did that. So we ended up coming right back into this demand zone. Never entered this trade, by the way, mainly because we did not close and come back to the upside. We just continued and fell right through that demand zone. So what happens to that demand zone? It comes support, right? So basically what happened is you continue and it broke through, continue, came back down here, pivoted back up into that demand zone, hit that demand zone, and then fell. Although I did miss this trade, if I did see this trade as it was happening, but I didn't know it was going this high. When I looked at it, it was this candlestick where it was, a little bit high, but not back into the zone. If I saw if it was back in the zone, I would have taken this short and probably rid it back down into this area right here. Obviously, I'm not going to lie to you and say, oh, I would have rid it to the bottom. No, I would have definitely took it back into this demand zone on the 4 hour, right? So that was a simple 35.1 pip move is what it would have been, but my stop loss also would have been based off of where it was previously. So it'd be probably about 4.5 pips. That's a 7.8 risk to reward. So as you can tell, some of these can be very, very profitable and in your favor a ton, right? So when you see something like that breaking through and coming back to test the supply or demand zone, just know that it can continue to go that opposite way, because obviously there's always pullbacks in the markets. As you can tell, pullback, come all the way back up, pullback, continue up. You need pullbacks to continue in your favor. But it was another really good lesson because that just proved that these actually work, right? So then we have a Euro US dollar example right now that I'm looking at. We have a demand zone right here with a huge move to the upside. And I mean a huge move to the upside. You can also consider this a demand zone, but obviously, why would I even look at that? We've already hit that and continue to broke that. But I do want to give you guys this example as well. So this would have been another demand zone, right? And you can tell we broke straight through it, never close to the upside. We just broke straight through it and retested. Then we retested, and once you see it starting to move back down, that's when you take those shorts, or then you could have taken those shorts all the way down to this demand zone. Still would have been a W. But you don't want to place 1 million trades a day, you want the odds in your favor. So I ended up actually finding this demand zone, and you could tell that we were here previously, and it was a support zone previously as well. That's another really good confluence. Bang, another really good support zone. So what am I gonna do? I'm gonna ride this down, and if it hits this zone and comes back up, I'm gonna take it on that come up, or then I'm gonna have my take profit for that recent high at 36.8 pips. My stop loss, obviously knowing that this is a support zone. It's not a support line, it's a support zone. So I'm gonna probably take my stop loss and put it below these wicks right here at 7.3 pips for a solid 5.04 risk to reward. Another very, very high risk to reward. That's literally how I trade. And as you can tell, the moving average is right here. So if we move back down into the zone, we could be actually really close to that moving average, which really doesn't matter at that point. RSI is extremely low right now. So I wouldn't be surprised if we have a little bit of a pullback and then continue back down into the zone and close in that zone.